Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. Alright folks, here we are after market close on Monday, April 29th. We're going to take a look at SoFi today. So SoFi had earnings this morning, as I'm sure you know. The basic gist, SoFi beat on the top and bottom line for the quarter that it reported this morning. However, previous guidance was estimated for the upcoming quarter to be at $590 million, and they revised that down to $555 to $565 million. So a significant enough reduction. And of course, it's just in these growth stocks and these stocks that once had or maybe still have the stink of the SPAC, as it's since turned out, there's just very little to no tolerance in the market for anything other than really rosy pictures, meaning beat or meet current revenue numbers, and then again beat, like either revise upward or confirm on par for the guidance that had been given for the upcoming quarter or quarters. And so because of that, even though the numbers, at first looked good because it was a beat and a beat, the guidance just giving it the crush of down 10% today. So what does that mean on the chart? For the chart, it does put it in an interesting position. What I had mentioned in the last SoFi video was I didn't know that it would have a restrained enough reaction to earnings, either up or down, to keep it within this formation that we've been tracking for quite a while now. This would have been put in sometime between, say, mid-February and mid-March is about when this formation would have sort of taken shape. So it's, maybe 6 weeks-ish old, 8 weeks, something like that. And it's continuing to hold in there, even though it's come down to the bottom of the formation. But as I had mentioned that last video, it does have two things, again, just from a chart perspective, to try to hold it above water, if you will. By above water, I just mean above this uptrend support. This 693 support level that we've had on the chart for quite some time, that had continued to hold leading up to this, and then the drop down today pushed it down. The low today coming in at $7 on the dot, so not needing to come all the way down to that 693. For example, the low on this day was 697. So if it's able to hold, meaning having a sideways-ish day tomorrow, or even sort of, curl back up a little bit, have a slight recovery day, it could be a good sign that it doesn't need to come down and retest the sub-7 level and hope once again that buyers are going to show up even in the aftermath of an earnings that was seen, by and large as not successful, not positive, and staring down the barrel of the potential that the next earnings, might again feel a little bit light, feel a little bit less than positive, even if they hit the revised numbers that they put out today. I don't know if how the market will feel about that. We have to see. And there wasn't much of a run up at all into earnings. I mean, I know it did come from about 7 here up to about 790 at the high. So percentage wise, sure, decent run up. But as you see, it just sort of pulled all of that basically today. It's about back to where it was previously. And I'm just saying that in the sense of we didn't see a run up like this, right? Like this is wild times. This is 650 to 1050 heading in toward, this earnings here. So we didn't see anything like that. And big run ups or big drawdowns in stocks that can be volatile like SoFi, it's just different than if you're saying oh, there was a big run up by, I don't know, Procter & Gamble into earnings. they're two very different stocks for the time being. So what I'm looking for is, can this formation continue to play out? If it does, I mean, at its real stretch date, it would be about June 10th that it would push itself out of this, either down or up, if we do get a big move out of this. But I mean, it's going to get really confined here say in a couple weeks into mid-March, it's going to be really compressed within this range. Not a lot of movement to be had to keep it within the bounds of this formation. So I'm still looking at that, and I'm kind of surprised that it's still in play after today. But we'll see if that, we could go through tomorrow and it's not, right? It could certainly slip this 693 and start operating down here. So we'll see. I'm not taking this as a clear indication of it's going to be able to hold in this formation, but I'm just interested in the fact that it is at all. So this is still my primary focus, the playing out of this formation, and if we can get a big pop one direction or the other, again, just based off of the chart itself. Now, initial catalysts that at least I'm going to be looking out for, in case you haven't thought through it: analysts revising, upgrading, downgrading, maintaining, setting new price targets based off of the most recent earnings report from SoFi. SoFi historically has obviously had the potential for big reactions on earnings, but then again also has had the potential for big reactions from some analysts doing those things: downgrading, upgrading, maintaining, lowering, raising price targets. So that could certainly, there could be a flurry of those coming that could really impact the stock from a catalyst perspective. So I'm going to keep my eyes peeled for that as well, but that's outside of the bounds of the chart basically, right? But if it does jump up quickly or fall down quickly, then I would still rely on the levels to come into play. But it's just a question of how much is it going to jump or how much is it going to fall, and what levels are there. Now on the think or swim side of things, again, it's within the confines of the channel, so it doesn't look super catastrophic to me on this. I would say if it does need to come down all the way to the lower bound of the channel, which right now is 672, again, that's to me not going to feel great from a perspective of either this formation playing out, of course, but also from the perspective of, does this set us on a path of just sort of like trading day after trading day, trading week after trading week of rug pull? And we've seen that happen many, many times in the past. You can zoom out just like I can zoom out and look at the chart and see how many times it's sort of run up and then run right back down. And so I'm just curious to see if that happens. If it does that mean we come all the way back toward the 634 level, which was this big drawdown? That's where it settled there. I don't know, but SoFi certainly has the capacity and the history of sometimes just erasing gains or run-ups, post-catalyst. So we'll see if that's the case. But again, just on the think or swim side, it could fall to 672, still be in the channel. So there's that, and it could rise to 812 and still be in the channel. Now the mid-range of the channel is 742, and it's, if it's going to really play out this formation, I know that it seems like I'm fixated on this a lot, but it could be an interesting play. Having it simultaneously pin itself to the mid-range of this channel, so, rise back up to, 725, 730, 740, something like that, and kind of just beat itself around the mid-range of the channel like it did here, a little bit below, a little bit above, a little bit below, a little bit above. That could be super interesting, especially if it starts to re-trigger on the TTM squeeze indicator. So I know I'm setting up like pure hypotheticals if it does this and this and this and this and this, but again, short of that, it is just a little bit of looking at the bounds of the channel to see if it can catch support or resistance there, and looking at these levels of 693, 634, 561 to the downside, or 745, 826, and 919 to the upside. So just sort of trying to explore other options beyond just the sort of boring quality of just saying like, here, I could just take a snapshot of this and post it and say, these are the levels that I see, right? And many of these have been on the chart for months or maybe even years at this point. So it's sort of old news. So the new story to me is what I'm talking about, this formation. And if that could be further backed up by pinning itself to the mid-range of the channel here for a while, kind of taking a chill, moving relatively sideways, then I might really start waving the flag here and going, let's keep an eye on this. This could get really interesting. So we'll see if that starts to take shape or not. But for the moment, I'm just a little tickled. That's not that it dropped over 10%, but that it's still holding in the formation. That's it's more than I expected, to be honest. All right, folks. I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.